Nothing short of exemplary.
The word that would best describe them, I think, would be trustworthy.
They're just a fantastic group of people.
We have a fantastic team in Alpha Wealth. We're all fully qualified individuals with over 60 years of combined experience between us.
I've spoken to so many different people that they feel like they've just like an extra cousin I've never met before, and they're always there with a kind of a helping hand to do whatever I need.
They have a very professional approach, and you feel like you're getting advice that you can trust and rely on.
They're a company that I would definitely recommend to friends and family. Nick and the team are there at the end of a phone or at the end of an email, and they will always come back to you.
Alpha Wealth provide a full range service to our clients' needs, just to make sure that you're doing the right things for you and getting the most from your own money, getting it working harder for you and ensuring that your family are protected.
Good evening, everyone. Thank you very much for joining us this evening. For those of you that don't know me, my name is Nick Shaw-Lambus and I'm the Managing Director of Alpha Wealth. I'm conscious some of you may have been on previous webinars, and we hope that we're able to give you some, I suppose, tips and guidance. This specific webinar is about giving you some, I suppose, specific financial tips in the areas of personal finance to help you save €10,000. I'm joined this evening by two of my colleagues, Cleaner O'Donoghue and Keenan Cunningham, and we're going to try and make this session a little bit more interactive and informal than some of the previous ones. And as I say, I'm going to give you the opportunity to ask questions, and please do feel free to do so in the Q&A function. We will have an opportunity to go through some questions at the end, and you can ask them either anonymously or indeed, obviously, if you want to just provide your name. My colleague Keenan's going to put up a poll just while we're waiting for one or two people to join us. And if you do get an opportunity, you might just answer that just until we get started. And we will get started in the next kind of 20 seconds or so. But basically, we're just looking to see, for those of you that I suppose are looking to plan ahead for 2023, what financial objectives you may have set, or indeed what I suppose you're hoping to achieve next year. And really, what I'd like to sort of, I suppose, get across to you today is that you may have started this year with certain goals, maybe to start a pension scheme or indeed start a savings plan for your children. And really what I want to try and help you do is find the money to do that, and also enable you to know what the best options are that are out there. Just going to mention briefly about Alpha Wealth. We are a very progressive company. We started 9 years ago, and we've built up over 2,000 clients with 8 QFA qualified professionals, and we're giving, I suppose, financial advice to people all over the country, primarily over Zoom, but also in person. And really what we're asking you to do is maybe consider your own personal situation and how you can further better yourself, particularly in what is a challenging time. And I must, I suppose, acknowledge the fact that, you know, we are faced with a lot of different, I suppose, headwinds in terms of rising energy costs, inflation, interest rates, and so on. And it's really about trying to help you do the best you can in your own specific situation. So I wanted to talk briefly about what you're going to get from this webinar, and to run through how we can help you achieve your financial goals, which I've touched upon, but also helping you rationalize your finances in different parts. And I break them up into short, medium, long term. Also, how to help you save €10,000 next year. And I'm going to do so by showing specific case studies. And then finally, what is in our financial review.
So Nick, can I pop in there just for a minute? Because when we sent out the invites to this meeting, I got a question back from somebody just saying that the question was, I feel I am struggling to save money every month, so saving 10,000 sounds like a lot. Can you just give a bit of context really around that question before you kick off, if that's okay?
Yeah, absolutely. So I suppose really just say, guys, and it might seem a little bit, I suppose, of a dramatic statement, but what I wanted to do today is just give you a quick indication of how I feel we can all plan better and work towards the goals that we have. So you can hopefully see here on the slide about how I would like you to think about your own finances. And I'm going to run through, I suppose, the way in which we start, which is through a financial budgeter. But really the main premise behind today is, how can I help you save 10% of your earnings? And typically using the budget calculator, which I'm going to run through, and starting with your savings first. And the problem a lot of us make is that we spend money on various different things, committed expenses like mortgages, savings accounts for, I suppose, you know, paying off debt, to financing, going out and so on. And it leaves very little for things that we want to plan for the future. And what I'm trying to do really with clients is get you to understand about how you can reframe your finances. You commit the 10% to your savings, be it pensions or medium-term savings, and then you spend the rest rather than the other way around. Because the problem is you never find that money at the end of the month because of the other forms of expenses that we go through. Specifically, and I suppose to get to
sorry, Nick, I'm just going to stop you there because we've just had a question in the Q&A just saying from somebody that they can't hear anything, and is it just them? So could we maybe just get a thumbs up or a hand raise from somebody and just to say that they're okay? Yeah, I think everybody else can hear.
Great.
Sorry for interrupting you.
That's okay. So I suppose, guys, to get to the juggler, and please do, you know, mention any questions at this point. As I said, we want to try and make this interactive as possible. I'm going to give some specific examples there in a moment, but typically the savings that we achieve for clients average around 570 euros a month. Now, obviously, that's not the 10,000, and I'm going to show you specifically how we can save you more money. But the areas in which we save our clients money on typically vary from mortgage accounts. We provide independent advice to people specifically around getting the cost of your mortgage down, whether it's switching your mortgage or indeed speaking to your existing bank and making sure you're not paying over typically 2.25% interest rate. And more importantly is that you're not going to get caught out with the increase in interest rates that we're currently facing. And there's huge opportunities in that. You know, we've moved clients over to green mortgages, which are very attractive. And a lot of people may not realize that they can qualify for a green mortgage. But also there is an opportunity within the banks. AIB, for example, have some quite attractive long-term interest rates, as do Bank of Ireland. But the key thing is to know what the options are. And again, without too much hassle, being able to avail of them. Other areas that we help you save money on are things like mortgage protection. We've seen huge, I suppose, premiums that clients are paying, unnecessarily, I should add, on products such as mortgage protection and indeed health insurance. The cost of health insurance has risen hugely over the last year, by the way. We're seeing typically increases of about 50 to 100%. But we've always seen situations where people can save money. And the general cost of house insurance, in my mind, for an average type property should be around 30 euros a month. So again, it's important to understand that you can change quite easily. There's no drama with it. And that's another example of how we can save you money. Car insurance, I suppose, seems like a fairly obvious one. And I know a lot of people think that they shop around well. Really what we're saying to you is give yourself another option by reaching out to Alpha Wealth. We don't provide car insurance, but we do provide independent brokers that can, I suppose, work for you based across the 11 companies in the industry that provide car insurance and make sure that you're on the cheapest rate possible. Loans may seem like an unusual one. How can we save you money on loans? It's basically getting the cost of your debt reduced. I've come across a lot of clients recently that are paying in excess of 8, 9, 10% for loans through the credit union banks, where we've helped them repackage their loans at a lower cost to them. Health insurance is a huge area for anyone who's paying for health insurance personally. There's massive opportunities in discounts. I'm going to show you a couple of examples in a moment, and also making sure that you're availing of various offers. And then lastly, savings and pensions, which I'm going to touch upon as we go through this. But as I said, this is an average type scenario that we've helped clients with. Just, I suppose, before I kind of get into the examples, I just want to show you the crux of really the starting point for everybody. This is the personal budgeter that is available on our website. It's a free tool that I encourage all of you to use, especially as we are coming towards the year end. And it's really easy to populate, you know, whether you're on your own or if you're with a partner, you may have more than one source of income. And what you do is you just populate the fields. It's very simple to follow. As you can see there as an example on the screen. And then you provide your monthly expenses. I ask people to do this maybe one evening takes typically about 15-20 minutes if you have your online banking app open, or a month's worth of bank statements. And it really helps you visualize where you're spending your money on, how are you allocating it. And if you provide that to a good independent financial advisor, and if you have an advisor, obviously make sure that you're doing this with them, or indeed you can use Alpha Wealth, whereby we can help you understand about how you can save money and make sure that you're fully allocating your money in the right areas. This then gives an overall summary. So what we've done is we've provided kind of, I suppose, a really nice way of seeing what your monthly income is, what your total expenses are. And this is something that a lot of us come across where, you know, they say to me, Nick, I don't seem to have that 1,225 euros a month that my financial budget is telling me that I should have. And we work with you and help you understand why there isn't that gap. And it's about making sure that you're not sort of spending too much on these kind of discretionary, unknown expenses. And really it's about kind of focusing, as I say. I see a few questions coming through, and please do ask questions, guys, on the Q&A. We will endeavour to get through them as we go forward. So I suppose in terms of helping you understand about managing your money, and this again is around, you know, once we achieve savings for you, and I will give you specific examples in a moment, how we work with clients around understanding short, medium and long-term objectives that we have. Short-term I classify as anything from 0 to 3 years. Medium term is 3 years to retirement, which for most of us probably tends to be 10 years or more. And long-term then is your retirement years, which could be anything up to about a third or indeed a quarter of your life. So it really is important to make sure that you are funding appropriately for that. So let's say, for example, you have, I suppose, a financial obligation in the next 12 to 24 months. You want to do some work to the house, or you have a child that's starting college and you need money for that purpose. Really, you're going to be committed towards saving into a bank. There is no other option available to you. As much as it pains me to say to people, you need to keep your money in a safe place that's not going to earn interest, it is the only option. However, for most of us, and particularly if we can help you eke out some savings, I'd like to suggest that you can save into medium term, again, 3-year plus type savings vehicles that will give you the opportunity to grow your money and earn interest. And more importantly, make sure that you're not losing money to inflation. And there are some really good savings vehicles available, which I am going to touch upon, as well as the fact that pension planning is important. You know, maybe some of you have a pension scheme through your employment. Some of you may have an independent pension. You may have a pension from your previous employment. And whilst my industry overcomplicates pensions, the way I'd like you to see them is just a long-term savings plan with tax benefits. And we're not here tonight to try and sell you a pension. We're here to try and help you understand how you can use your pension effectively to make sure that you can either retire early, which is one of the case examples I'm going to use, or indeed you get to a point where you can have a satisfactory lifestyle in retirement.
Nick, can I stop you there and just ask you another question? What type of savings should I be doing? Short, medium, or long term? Or is it a combination of all three?
Okay, it's a really good question. And I'm just going to go on to more specifics, but it's really about balance in general. So again, normally it would be a case of typically all three and finding the right balance. And a lot of what we do as financial advisors, particularly on an ongoing basis, is checking in at least once a year and making sure that you have the right balance. So again, a lot of clients we speak to at the moment, particularly younger clients who are trying to save for a mortgage, they're obsessed with just getting to the point of which they get their deposit over the line. And a lot of them probably achieve in that they get their 10% deposit, but they continually try and oversave. And I say to them, well, you have other objectives in life. You're going to want to put some furniture into this house that you're saving so hard for, or you're going to want to still help try and grow your money to enable you to enjoy your future years, whether it be in retirement or indeed, you know, planning for a really nice holiday or getting married or your kids and so on. So again, it's really about finding the right balance. But if it helps, just to give you kind of a specific example, a medium-term savings plan that we recommend in Alpha Wealth. And again, there's a webinar that we've done recently, which we can share with you about how to build 30,000 over 4 years. And I give the specific example of how we help clients in a little bit more detail save the 570 euros a month, which over a 4-year period with interest of 3.5% will get you to that point. To, I suppose, cut to it, Zurich, who are one of the providers in the Irish market that we really favour for this type of savings, have a really good savings plan. It's part of our Alpha Wealth Savings Club that we've run for the last 2 years, where we have achieved returns of about 5% a year, even in this challenging market, where it provides no exit penalties, no entry costs. We reduce the fees down to a minimum, whereby you can get your money working for you on a risk and sliding scale, whereby it doesn't have to be high risk, it doesn't have to be low risk, and it's really about trying to help you find the right type of plan for you.
So,
Just-
Nick, I'm going to ask you just one more question, and then I will keep the rest of them for the end, if that's okay. So this is from somebody else who said, I feel I'm okay at managing my money from month to month. How do you feel you could benefit me?
A lot of what we do is in Alpha Wealth is not about trying to necessarily re-educate people or tell you that, you know, what you're doing isn't right. It's just about sort of tweaking and maybe helping you to, again, rebalance what you're doing with your money. So in that instance, you know, it might be a case of saying to somebody, well, okay, maybe you are, you know, in a comfortable position. You know, a lot of clients we talk to are earning good money, but they may be paying too much money in tax. And, you know, it's not necessarily a massive problem for them, but we're trying to help them. And it's really about this roadmap, as I refer to. How can we get you to that point of financial independence sooner or with less hassle? You know, and it's really about, you know, again, for me personally, you know, I run a business, and whilst, you know, I've worked hard to try and make sure that my business grows and it doesn't suffer too much from COVID and obviously rising costs and so on and so forth. What I'm trying to do now is find balance where I can get my money working a bit harder for me. That would allow me then the ability to sort of enjoy more family time, or indeed not have to, you know, necessarily work as many hours. So one specific point in case is that some of you may not necessarily be aware of the fact that there are very, very attractive investment vehicles available. This particular one I've put up on the screen is a tax-back scheme where any Irish individual earning over 40,000 a year can avail of this and invest a minimum of 5,000 euros and get 40% back on their investment from the government over a 4 to 5 year period. The scheme is called the Employment Investment Incentive Scheme, or EIIS scheme. There's actually a supplement in the Sunday Business Post this Sunday where a lot of companies will be advertising for this scheme. It's about 60 or 70 a year that look for this type of finance. And our role in Alpha Wealth is to explain the scheme to you and pick the best 2 or 3 companies based on our experience and our ability to mine the companies and using our due diligence to ensure that the best companies are provided to our clients. The example on the screen here is for somebody who say has 10,000 euros, maybe you got a bonus at work or you sold some of your company shares. You can reinvest that money into this scheme over that 4 to 5 year period and get 40% back, 4,000 in this case, early next year from the Irish government. And that's a guaranteed return of that money to you. So you're already up 40% on your investment, which if you think about it, that means that your net investment of 6,000 has now become 10,000, which is actually a 66% return if you think of the logic of that. On top of that, you expect to get typically about 20% back after the 4 to 5 years, which effectively nets out at about 12,000 euros. Now, some people say to me, Nick, that sounds too good to be true. The scheme has actually been available since 2011, and there's been many, many successful companies that have paid back with interest in excess of the 20% that I'm quoting here. The key thing, though, is to understand the scheme and to know which are the best companies that are available. I'm just going to talk briefly about the specific examples that I mentioned earlier. And these are real life case studies of clients that I've dealt with over the last couple of years. I've obviously changed the names, but just to say, there was a couple that I dealt with there where they hadn't pension provisions set up. And I looked at their situation and they had a lot of different kind of needs and I suppose financial objectives and goals. So what we did was we set them up with a pension scheme. They were earning about 50,000 a year, whereby I encouraged them to put in 5,000 euros into a pension scheme where they were getting 40% back. So it was costing them 3,000 euros. So essentially that was the 2,000 euros of the 10,000 that I've mentioned. I helped them reduce their mortgage repayment. They were currently on 2.95 when I met them with AIB. A very simple call to AIB brought it back down to 2.2%, and they fixed for 5 years. And this was just before the recent rate rise, but it's all relative in terms of making sure that they weren't going to be caught with rate increases. And again, I would encourage all of you to consider, if you are on a fixed rate, if it's coming to expire in the next 12 to 36 months, you do need to get in touch with your bank and make sure that you look to try and fix it for at least 60 months from now, which is 5 years, obviously. I help them reduce the cost of their health insurance. Again, as an independent broker, we don't provide health insurance, but we help clients get the best deals and offers. They were with Leia. They stayed with Leia, but they availed of an online discount. It was actually the plan that I'm on, which is the Flex 500 Explore. But they also enabled themselves to not pay for more than one child, something that I've always achieved, getting very good plans for their kids, but only having to pay for one of them. We provided income protection for Michelle in a very tax efficient manner, where she got 40% of a rebate of her contributions. They were worried about the fact that if anything happened to her, it would have a big dent on the family's income. We reduced the cost of their mortgage protection, as I mentioned earlier. We basically halved the cost by giving them a like-for-like policy, but with discounts that we were able to apply to them, which the bank that they went to initially did not do. And we also reduced the cost of house and car insurance by around 90 euros a month. And that essentially paid for a lot of the other items. Now, again, if you're asking me, Nick, well, how did you save them 10,000 euros? Well, the interest that they were making on a savings plan that we also diverted from the child allowance, which is a Zurich plan that I alluded to earlier, was going to generate about 8,000 interest. And as it happens, these were clients that I met a few years ago. That's exactly what transpired. And if you add the benefit of the mortgage savings cost that we got for them, plus the health insurance cost and the mortgage protection cost, we saved them vastly in excess of 10,000 euros. So again, I'm not saying that lightly. There are huge opportunities for us to help you save money. It's really about making sure that you're doing the absolute best you can and knowing what are the best products that are out there. I'm just going to mention briefly about another example, and I'm again changing names, but John and Sarah, who were single individuals that I met, different objectives. They were twins in this case. John wanted to buy a house, Sarah wanted to retire early. So in John's instance, what we did for him is that we helped him save the 30,000 over the 4 years, using exactly the example I gave you earlier. He was that person that we were able to save 570 euros a month for. And again, the interest that he generated over that period was about 3,300 odd euros over that 4-year term that I referred to. And we helped him through an independent mortgage broker. And we have dealings with many different mortgage brokers around the country. We have no bias. We don't mind who you use, as long as you use a good one, where he was able to get a green mortgage at 2.1% at an exception, which was given to him earlier this year, before the changes obviously taking place in January, because some of the banks do provide that exception, where he bought a house using the 270 that he was able to borrow, plus the 30,000 that he saved up. Again, if anyone's interested in finding a bit more about the savings plan that I've spoken about, there is a video on our website, which I would encourage you to listen to. It's a 30-minute video. We were able to provide him a discount on the insurance that he was required to take out, and we brokered the house insurance. But the savings that we were able to accumulate for him on the mortgage interest alone were around 7,000 euros. And then if you added in the savings on mortgage protection and house insurance, on top of the fact that we were able to get him a savings rate on his savings account that he did continue post taking the mortgage, there was significant savings for him. In Sarah's case, and this is a situation of someone where we weren't actually looking after a pension. Sarah was an employee of one of the tech companies, where all we did was encourage her to pay more into her company pension plan. She thought she was maxing her pension because she was meeting her company's payment, where she was paying 5% of her salary. And we explained to her that because she was in her 30s, she could pay 20% of her salary, and she could well afford to do that. So on an 80,000 salary, that was 16,000 euros gross, which may sound a lot to some people, but because of the fact that she was getting 40% tax relief on that investment into the pension on a monthly basis, it was costing her 800 euros a month. But by doing that, she was saving 4,800 euros in tax. It was a really simple thing she did. We didn't earn any money by giving her that advice, but it was the right thing for her to do. And I showed her the projection of what it'll achieve for her by age 55, where she was going to build a fund in today's terms of 530,000, getting typically 130,000 tax-free and giving her a salary of about 31,000 a year, plus the state benefit when she turned 66. On top of that, because Sarah had built up some money and because she was availing of company shares that she was selling, which I encourage my clients to do, because there is a tax break every year for them, and because I don't like them carrying too much exposure in any one company, Sarah had invested in that tax back scheme that I mentioned, and she was able to save another 6,000 a year by investing the 15,000 a year into that scheme. And again, if you add up the two savings, one for the pension and the other for the tax scheme, she was saving around 10,800 a year, which she was actually using then to invest in other schemes and indeed continually enable her to fund in the pension. And obviously that was going to reach financial independence for her. So I suppose that was really the main thing. The last thing I just want to say is for those of you that may want to try and find an extra source of income, and it's something that's forgotten about by a lot of people, but if you happen to have a spare room in your house, or if you happen to have a child that maybe has moved out recently or is going to college elsewhere, the rent-a-room scheme is really something that I would encourage you to consider. You know, it's a way of you earning up to 14,000 a year, which is around 1166 a month, tax-free, by just, you know, obviously giving up the use of a room in your house. I appreciate it may not suit everybody, but it's just something to bear in mind. And it also applies to people who may be renting. You don't actually have to own the house. And if anyone would like some advice or guidance on that, or indeed anything I've said this evening, please do feel free to email me, and I'm more than happy to do that. The final thing, just before I bring Cleaner back in, is that we are offering a discounted financial review for anyone that has listened to the webinar this evening, or indeed anyone that you know, friends or family that you would like, or feel that they would avail of the review. It's normally 199 euros. Some financial advisors out there, the likes of Owen McGee, that some of you may have heard on television, are charging 2,500 for the same review that we offer our clients. I'd like to think that we do a lot better. I pride myself in the advice that we give clients. But as I say, the cost of the financial review for anyone that wants to avail of it before Christmas is 99 euros. And it is something that I do feel that we can give you a lot of benefit for. So I'd like to bring Cleaner in and
thanks, Nick. Yeah, we've had a few questions in, so thank you for those who have put some questions into the Q&A, and I would encourage people to ask any more questions as well. So just start. You mentioned the savings club. So do you offer ongoing advice to existing clients on a monthly basis? And maybe you can just give a bit of background actually to the Alpha Wealth Savings Club.
Yeah, so we set up the Alpha Wealth Savings Club a year ago, and it's through Zurich. As I said earlier, we really like Zurich. They're a very progressive company, low cost. They provide the best fund performance, which we can show our clients as an independent broker. And it's a really great way of you just saving a minimum of 100 euros a month or more. No exit costs. As I said, you have access to the monies all the time. We would encourage you to look at it as a 3-year plus savings vehicle. So for any of those objectives over 3 years, we provide updates to you. You get online access to it if you want to look at it yourselves, but we do all of the hand holding. You don't deal with Zurich at all. It's through Alpha Wealth and myself and the team in Alpha. We have a really good team. It's really easy to set up, and we provide you updates in terms of its performance and how it works for you. You can put lump sums into it. You can put the child allowance in. You can put in an amount, and it is the best account of its type by far. I tell all of my clients, you really should avail of it, even if it's a case of the minimum amount, just to get you saving.
So that kind of leads on to the next question, which says, can lump sums be added to Zurich for your savings up front? And I suppose, is there a maximum in terms of the lump sum that can be added?
There's really no maximum. We have clients who put in as little as 5,000 euros to clients who put in north of 100,000 plus. It's just dependent on each person's situation. But yes, absolutely. We have clients who are adding to their account on occasion that suits them. They may get a bonus at work. They may have received some monies from a gift, inheritance, or indeed they may have some money just sit in the bank idle. And really what this account is to do is to give you a return above inflation, which I believe this account will do. I appreciate inflation is very high at the moment. It will start to normalize, obviously, with the interest rate rises. But this account historically has averaged at least 5% a year on a rolling basis over 3 years plus. And we show that to our clients.
So I'm going to challenge you now with this question, which is, why would you recommend a managed fund such as that, as opposed to an index tracker ETF, which has substantially less fees and are proven to outperform funds such as the one you mentioned?
With the greatest respect, I disagree with the person's comment about passive funds outperforming managed ones. Now, just for those of you, what Zurich do is they're an active manager. They cherry pick companies. And in this environment that we've seen over the last 11 months, where investment markets have suffered terribly, the S&P, which is the US market, which is basically all of the companies in the US, which is essentially a passive fund. You know, nobody picks the companies. It just is tracking all of those companies in the US market. It has suffered terribly this year. It's down about 17% year to date. These managed funds, they reduce the risks that you suffer. They invest in other asset classes like alternatives, which are energy type instruments like oil, and also other instruments like gold, but also more defensive investments as well. So with the greatest respect, I do feel very strongly that for investors that want to benefit from active management, where they know their money is being looked at and it's not as risky as a passive fund, I would strongly encourage you to consider this. And by the way, the fees are not excessively higher. The management charge that we provide for our clients in Zurich varies between 1.35 and 1.6% per annum. That's the only cost that you pay. For these passive funds, the fee may be anywhere between sort of 0.1 to 0.5%. But the outperformance can be significant. We've seen them typically outperform by 3-4% this year. So again, I think it's a case of what may suit the individual. And it may be back to a balance. As I said, I'm not trying to tell people not to put their money into passive funds. I just think there's a very strong argument for somebody to actively manage, particularly in this environment that we find ourselves in.
Great. In relation to a bonus payment, this question is, so do you have to pay tax on your bonus before investing it, or can the fund be directly invested?
Unfortunately, the tax man will always try and get their wedge of your money. Now, if it is going into any form of investment outside of your own company, yes, you will suffer tax on it. The other thing I'd encourage you to do is that if you're working for a company that provides a pension scheme, ask them, can you put the bonus directly into the pension? Because if you can, that is a way of avoiding tax. Alternatively, you may have a share save scheme at work. And if it's an option available to you, and a lot of the bigger companies tend to offer this to their staff, again, it's a way of being very tax efficient. But if you can't avoid the tax, let's say you get paid the bonus and you do suffer the 52%, unfortunately, if you earn over 40,000 a year, using that tax scheme that I mentioned earlier, the EIS scheme, will enable you to get back 40%. So it's a really great vehicle to use to essentially get back some of the tax that the taxman has taken off you.
Are government bonds worth saving with or saving into?
No, I don't like people investing in government bonds. I don't like them investing in the post office, prize bonds or whatever. They're low interest instruments and they can actually be quite risky. Government bonds have fallen significantly this year. So for what should be seen as a safe investment has proven to be anything but that. So again, my strong advice to you is invest in a good manager. Let us man mark them, which is what we do for our clients, and see the benefits of the returns that I've quoted you. As I said to you, we quote our clients between 3.5% and 5% per year over a 3-year plus period. And any period over the last 100 years, these funds have performed that.
So then I think this leads on to the next question, which is, I saved 600 monthly into a credit union account. What options will you provide that will give more yield with my savings than the credit union?
For 3 years plus the Zurich savings account. Again, if your objective is to use that money within 3 years, the credit union is the only place. So what I'd suggest in your case is it might be a case of finding a balance. It depends on what you're saving this money for. And this is us identifying with you and helping you, I suppose, with the financial budgeter to try and assess like what your objectives are and how you can make sure that you're using your money wisely.
I think you're being challenged again on the passive versus managed funds. So it just says, right, which if you are a regular investor, dollar cost averaging, then a passive fund is historically proven to outperform. Anyway, I think you can probably take that offline. Just in relation to financial tips, what is the best financial tip you can give me for, well, now 2022 or 2023?
So on that, the best tip I can leave you with this evening is make sure that you set up a roadmap. Whoever you're getting advice from, and if you're not getting advice from someone, do engage with a financial advisor, because a lot of what I do is around planning. It's showing you what your pension's likely to achieve. Because if you don't know this evening what your pension scheme is worth, but more importantly, is if you don't know what it's likely to achieve at 60 years of age or 65 or 55 years of age, whenever you feel that you would like the option of being able to retire or be more financially independent, you don't have to stop working fully, then you should speak to ourselves, because that's what we do for our clients. The other thing is like savings. A lot of my clients are saving for their kids for third level. I have children, but they don't know what they're trying to save and they don't know how they're going to get there. And using very simple tools, I can show you perhaps separately a spreadsheet that we use, and we show you how we can help you start to plan for the future. So the best tip I can help you with is fill in the financial budgeter. It's really important. It's the thing that I encourage my clients to do every year. And the other thing is make sure that you set out a plan. And typically using Alpha Wealth, even if it's just a one-off review, you may even have your own financial advisor. I talk to clients and I help them understand about how we can work with you, even with an existing advisor, to point you in the right direction.
Are you okay to take 2 more questions, because we've had
Absolutely,
2 more?
yeah.
Okay, so if I take my bonus in shares instead of cash, are there any capital gains tax benefits if I hold the shares for a number of years?
Some companies have slightly varying share scheme arrangements, but typically you pay capital gains tax on the gain that you make on these shares. So let's say you work for Apple and you happen to get those shares at, for argument's sake, $100, and you sell them at $120, you will pay capital gains tax on the difference. But capital gains tax, you get an allowance, as I mentioned earlier, of 1,270 euros. So you should always sell enough shares to make sure that you benefit from not paying tax on that gain. But the other thing to note is that capital gains tax is taxed at a relatively low rate of 33%. But it's about knowing what you can do with the money instead. But as I said, the key thing is don't end up with too many shares in the one company. It isn't really ideal, and it's certainly, in my opinion, too risky.
And finally, then we'll finish off with this question, which is in relation to the EIIS scheme. Do you prefer or recommend investing in a single company or an EIIS fund?
That's a really good question. There are pros and cons, and the 2 companies that we are promoting this year, one of them is a fund and the other is an individual company. I won't get into specifics this evening, and we actually have decided that we are going to run one more webinar at the end of the month. We will send you details of that specifically on the EIIS scheme. So what I might suggest is that if you want to log on to that webinar, we'll be talking about specific companies on that day. But there are pros and cons, and it depends on really, I suppose, your positioning, but also giving you the choice. There's no right or wrong to this. It's about saying to you, these are the benefits and disadvantages of these particular companies, and allow you to make a decision. And it might be a case of spreading those between those 2 companies.
Great. Well, thank you very much, Nick. I'll let you close the
Great. I'd really like to thank you for your time again. And for those of you that have been on some of the webinars this year, we do really appreciate it. We will send you a feedback form. We are going to offer 1 in every 5 people a one for all voucher just to say thank you for filling in the feedback form, just because we do want to make sure that we are covering, I suppose, things that you do want. Just in relation to the poll, I can see here that there's a kind of a bit of a split in terms of what your objectives are for next year, between planning for financial independence to getting your savings working harder, and then a combination of above. I hope that I've been able to address in a short period of time, I suppose, a lot of the areas in which I think that you could probably look at. Certainly, you know, maybe even starting the new year fresh. But the most important thing is just don't let things just like idle by. I appreciate that, you know, we've all got things that we have to do in our own lives, and, you know, we're kind of time poor. But give us the benefit of an hour. That's what we ask us. And the financial review is no hassle. We do all of the lifting. We get the information on any existing policies for you, and we present it in a very open fashion and help you make sure that you understand. But the savings that we achieve our clients is not just tenfold of the cost of the financial review. I was showing you earlier, it's 100-fold. You pay €100 and I'll save you €10,000. Just give us the opportunity to show you how we can do that. So just say thank you again this evening, and we will be sending on the slides for anyone who would like them. Please do feel free to email me, nick@alphawealth.ie. If you do have a question, and if you would like to book in for a review, obviously we're more than happy to facilitate you at a time and day that suits you. Finally, as I say, just want to thank you all again for your engagement, and I appreciate, obviously, as I said, any of you, you know, listening to this, I appreciate if you're listening to this on playback. Do feel free even to reach out to us. Enjoy the rest of your evening, and thank you again. Take care.